You can be a financial advisor to yourself. You can be in charge of your own money. You can be in control and call the shots.
Oh yeah.
The big advantage is not having to pay someone else. Financial advisors charge fees. I mean, that's how they make their money. But that fee can be over 1% per year. The first advisor I ever saw charged over 1%. That was the main reason I didn't end up going with him. He was great, but I did the math and to me it was just too much money. Say you have $500,000 in your portfolio. That's $5,000 a year you pay someone else to manage your money for you. And if you had $1 million in your portfolio, you'd be paying someone $10,000 a year. Personally, I think I'd rather spend the time learning how to do it myself. You can build a comprehensive retirement plan on your own and on your terms. Do-it-yourself retirement planning isn't for everyone. It may not even end up being for me. I may end up with a financial planner in the future. Fee-only fiduciary planners are great. Especially as I get older, by 85 you might not think as clearly as you do at 55. So at some point, a financial planner really could add value. You might not be sure if you want to go DIY, hire a financial planner, or just get more involved in your own financial planning. This is what I'm grappling with right now. But it definitely can't hurt to do some research and learn more about financial planning. Even if you end up going with a financial planner, this can help you understand the strategies they're suggesting to you. The first step is managing your own investments, your investment portfolio. You can manage your own investments. You could go through brokerage firms like Schwab, Fidelity, E-Trade, Ally, or Vanguard. These are discount brokers. A discount broker is a company that allows you to buy or sell stocks or other investments online. It's like a self-service option for investors, and they have reduced commission rates compared to a full-service broker. But a discount broker does not provide investment advice. They also won't perform analysis for you like a full-service broker would. There are tons of different discount broker companies to choose from. Some even offer bonuses for moving your money to their firm. J.L. Collins, in his book The Simple Path to Wealth, suggests only having 3 funds: Vanguard Total Stock Market Index Fund, Vanguard Total Bond Market Index Fund, and cash. Collins says the more complex an investment is, the less likely it is to be profitable. Wow, I had to read that twice to make sure I read it correctly. He claims buying stocks in the market index reliably and consistently outperforms having professional management when you take costs into consideration. Rob Berger, in his book Retire Before Mom and Dad, says it's easy to find excellent low-fee investments. He says the lower the cost of the investments, the better they'll perform in the long run. Again, wow! He mentions the same funds that Collins does: Vanguard Total Stock Market Index Fund, Vanguard Total Bond Market Index Fund, and he adds in Vanguard Total International Stock Index. Just a quick reminder, I'm not a financial professional. This is just the story of my personal financial planning for retirement. You should do your own research and talk to your financial planner before investing. There are also wonderful do-it-yourself online retirement planning tools out there to help you. New Retirement is a great online do-it-yourself retirement planning tool. They have a free version. That's what I use. I've heard several YouTubers promoting the paid version, and I'm sure it's great because the free version is. I just haven't used the paid version myself yet. It shows you the chance of success and the probability of not running out of money in retirement. It's a Monte Carlo projection. They run simulations based on the projected cash flow, return, and volatility assumptions of your plan. Your chance of success is determined by the percentage of these simulations. Here's how mine looks. It says I have an 85% chance of fully funding my retirement through age 94. Personally, I'm okay with 85%. Sure, I'd love it to say 99%, but I'm willing to take that risk to be retired early. Now, if it said 50%, I'd be a little more worried. If you buy the premium version of New Retirement for $120 a year, you get access to more things. One of those is a Roth conversion calculator. The system will calculate Roth conversion amounts for you. It will calculate a conversion schedule for you that will save money in lifetime taxes. This is one reason I'm considering getting the paid version. You do have to set up an account with your email and some personal information, even for the free version. But several retirement books I've read, including Keys to a Successful Retirement by Fritz Gilbert, recommended New Retirement. Fritz Gilbert is the same guy who does the Retirement Manifesto blog, so I feel like it's legit and a safe place to put your information. It's just newretirement.com. Click on Get Started for free. I've had my free account for several years, so it's not just a trial. You can do a trial of the paid version. I haven't done that yet. If any of you have the paid version, let us know in the comments how you like it. I'd love to hear what you think and if it's worth getting the premium version. If you want to manage your finances yourself, instead of going with a financial advisor, you'll need to research and learn about financial planning. You'll need to stay disciplined and take it seriously. You'll also need to get comfortable making financial decisions and be able to stomach the ups and downs of investments. Market volatility is still really hard for me. By learning finance and investing basics, you may be able to manage your money without hiring a financial professional. If you're disciplined in spending, saving, and planning, you can be competent enough to manage your own finances. You have to decide what's right for you. DIY is not right for everyone. Whether you manage your retirement investments on your own or with the help of a financial planner, it's still a good idea to understand finance basics. If any of you are seeing me for the first time, hi, I'm Julie and this channel's Happy on Monday. Thanks for joining me. If you found this helpful, please like, and if you're interested in more videos like this, consider subscribing to my channel. I'm going to leave you with a quote. The win is coming. Don't let the win worry you. Hope to see you again soon.